Hello, good morning, everybody. Hope you're all doing well. This is the Bitcoin Not Crypto weekly live stream I do every single week, Monday at 10 a.m. Pacific Standard Time. This is a sort of a Q&A type live stream. People can join, ask questions, figure out what's going on with Bitcoin, self-custody. These are kind of the topics lately that I've been covering on my channel. Anything that's come up for you, you can ask in the comment section or in the live chat. And for the early comers to the show, I always like to give away some sats. So I do that through the Bitcoin Wishing Well, which is a program that Bitcoin Well has, which is my preferred exchange. And the way you can win is if you have a Lightning wallet on your phone, you can scan the QR code that's about to pop up on screen and you win the Satoshi amount. You can win up to 1 million Satoshis by doing this reward program. And if you don't want to have to compete against people, because only one person can scan each one of these, you can actually just sign up to Bitcoin Well using my link in the description, and you can do these reward programs without any competition. So the first person to scan that wins 563 sats, and there's very few people here at the start of the show. So yeah, it's always a good opportunity, a good chance that you can win these. And one time we had 210,000 sats, which is a serious amount of money. That's if you evened out the amount of Satoshis per person to all 8 billion people in the world and accounted for all the lost Bitcoin, it would probably be around 210,000 Satoshis, which we gave away to somebody. So we'll do one more of these and we'll do two at the end as well. And we'll get to the topic of today's video before we get to any questions. Bitcoin all-time high was 98 days ago. So 451 sats to whoever scans that. So it was 98 days ago, which is like very interesting. I think us as Bitcoiners, I think people that are posting on X, people talking about the 4-year cycle, the bear market, I think we all have amnesia. I think we have short-term memory loss. 98 days is nothing. It's 3 months. And oftentimes in Bitcoin, we talk about this idea of holding Bitcoin for 4 years so that you go through the ups and downs of the entire cycle, and nominally you'll be up at the end of 4 years. Just statistically and looking historically, that will be the case. And people talk about that a lot. I talk about that a lot. I think it's an important mindset to have. It gives you that long-term time horizon, which is not just good for your investing portfolio and for your savings, but also just good for other aspects of your life as well. Work, work, life, everything, right? Investing, like you can't have a child. I mean, you definitely can have one, but you can't raise a child in a meaningful way intentionally without the concept of a better future for that child for the work that you're doing today. So it builds a whole different type of mentality for people that don't have that already or weren't raised with it or haven't figured it out some other way. Bitcoin can actually change the way you operate in the world because it forces you to have a long-term time horizon because of the short-term volatility, and you realize potentially that affects other aspects of your life. So it's a very powerful tool for self-development as well, which is kind of an interesting concept. And yeah, basically Bitcoin was at 125,000, I believe it was, about 100 days ago, right? 98 days ago, October 6th was the all-time high. And we're chopping around between, what was the lowest we went? Maybe 77, 78, something like that, to 94. We're chopping around in this range here. This is the new 58K gang. I think there's going to probably be memes made about, I would say probably 87K gang. It seems like a price that we keep going back to. We keep having sort of this interest in the sort of broader Bitcoin market and treasury company ecosystem, specifically with strategy again. And Bitcoin sort of rallies up to 91, which is where we're at right now, 91.3. And I think that I think that Bitcoin's going to need more than that to break out of this range. I think there's a lot of people that are capitulating. I think there's a lot of people with short-term amnesia, and I think that they are selling, right? Why is Bitcoin not going up when Strategy just bought $1 billion worth of Bitcoin? I think it was. Let me actually just bring that up real quick on Twitter. I think it's pretty crazy actually what Strategy has been doing lately. So let's look up Sailor. And we'll bring that to the stage as well. Present screen, and here we go. So what did Sailor do? $1.25 billion worth of Bitcoin they bought. So that's a huge amount of buying pressure. Now, it's not super evenly dispersed because it is from OTC desks, which are sourcing it from all sorts of areas. Some of that might be market pressure. Some of it might just be peer-to-peer and tapping into some of the, wow, my hair is going wild today. It's tapping into some of the, whoa, this is crazy. I shouldn't get too fixated on that. Who cares? So some of it is peer-to-peer, which doesn't affect the market price because the price is always determined on the margin, right, of last buyer and last seller. And these are a global public market. And the market on Coinbase is different than the one on Kraken, which is different than the one on River. There's probably big overlaps of sources of capital that and buyers and sellers that match up on these marketplaces. However, an OTC desk is almost like that, but even more more unique. So you can get prices that you can sort of aim for prices, and then the broader market will like you can basically create like a limit order within OTC and have somebody actively buying at that limit order and closing out those deals. But that can have a delayed effect, right? It's when you're dealing with something that is scarce and has demand, that's always going to show up into the market in some fashion eventually. And the fact that Strategy now holds almost 700,000 Bitcoin and is buying 10,000 plus Bitcoin for the past few weeks, where does that show up? So the question here is why isn't Bitcoin rapidly going up because $1 billion is being bought by Strategy? Well, it's because it's a very liquid market where the sellers are matching that amount of buying. So it shouldn't be surprising that that's happening. And in fact, it's actually really good. And this is counterintuitive, and people will call this cope. But the fact that $1 billion in 1 week cannot move the market is not moving the market. Strategy is not responsible for Bitcoin's price going up is a really positive sign because you cannot attract serious capital into a market that has no liquidity where one player can dominate the price action based on them buying and selling. So that's exactly what you don't want in this environment. You don't want a market that is easy to affect, because then you will have people that will not be willing to get in because they are afraid that they will affect the price when they try to get out. So Strategy is a serious acquirer here. And if we actually take a look at this is the one here that we need actually, how they bought the Bitcoin is quite interesting too. I plan to make a video about STRC again because it's kind of become very interesting again. Last week was a full week of it trading above $100, which meant that they could actually hit the ATM on the STRC preferred. And they were able to raise $119 million from that. However, the lion's share of this was raised by MSTR common stock. And I had a covered call on my MSTR position that I sold at 167, and MSTR went up to 169. It went up and down kind of. It was really iffy there if that was going to expire in the money or not. But I suspected that this was happening because MSTR would rise at the beginning with Bitcoin having gone up overnight, and then MSTR sort of went maybe double as much, but then it sort of collapsed back down. And I saw that happen day after day. And that is people exiting positions. Of course, there's again, the the MSTR common stock ATM is not the only contributing factor to that price action, but it is one. And I could see that there was selling pressure, and I didn't know 100% that that's common stock ATM, but I figured as much. So I knew that the price was going to be suppressed of MSTR, which is kind of what's going on, and kind of what's interesting here is that the price of MSTR continually gets suppressed at this current level. But think about what that means if Bitcoin goes back to all-time highs and MSTR's Bitcoin position has increased drastically since Bitcoin was at previous all-time highs. It's going to be sort of a leveraged effect, or the beach ball under the water type effect with an asset or a security like strategy that has acquired a lot more Bitcoin and sees the amplification that they've put on their balance sheet by issuing equity preferreds that have a liability attached to them, or have a payment attached to them. So I'm excited to see that. I have a fairly large MSTR position still, so I'm selling covered calls on it the entire time, which has offset a large portion of the downward price action. I also bought my price. Actually, I think my average was. I mean, I bought some of it before pre-split, so it was under $100 per share of today. But I think my adjusted cost basis is, without selling covered calls, would be like 150. So I'm pretty close to like not being that profitable on this position, which sucks. But having sold so much covered calls the entire time of owning it has done me really well, and has basically allowed me to continue with a very volatile business endeavor, which is providing YouTube content as opposed to working a stable job or taking employment somewhere, which has been what I want to do, and allowed me to build this business basically. So yeah, very happy with that. Yeah, so when will we be at all-time highs? Again, that's kind of the question, and I think largely the answer I have is not going to satisfy many people, but it ultimately doesn't really matter, right? Again, long-term time horizon is what you need to have in this space. And personally, I'm very bullish for 2026. I know there's a lot of people out there that are not, but I don't really need or care for the opinions of others when it comes to this. If you just look at the tailwinds of the global market, and how much, if you just look at basically how broken the money is, and how everything continues to get more broken, and how credit is becoming easier to come by. If you think about the recent developments of what the Trump administration has done with mortgages, increasing the duration of mortgages to 50 years instead of 30, that is an increase in the availability of credit. That creates more credit and more debt and more money printing and more interest and more creation of money, right? More money needs to be created to pay back the principal plus interest. So that is just inevitable. And the more ease there is for credit creation, the more money gets printed, essentially. So either directly or indirectly. The other one is, I think they did something very similar with car loans, and then now Trump is trying to implement a 10% max cap at credit cards, which, from the surface, people are thinking, okay, that's great. I can lower the amount of payments that I have to make. It's if I have a credit card balance that I'm paying off or not paying off every month, but having interest accrue every single month. Well, it's going to be half as much interest that's going to accrue. Now, the thing is a lot of people out there carry a balance on their credit card, and they do so at the level where they're able to. And all this does is make them be able to create a larger balance. And what that does is create more spending, right? That's what the government is trying to do right now is basically juice spending, juice consumerism, allow people to buy homes and allow people to sell homes at the same price because it's become more affordable month to month, which is what people actually care about or what actually qualifies them for being able to buy a home. Same sort of thing is happening with this credit card cap, which is just more regulation. I don't know. It's anyway. I won't get into that right now about increased regulation, whether people see it as deemed properly or beneficial or not. Um, it just creates warped incentives, basically, and warped data where we don't actually know what the free market is wanting because we don't have a free market because we have regulation. So it's not working. But anyway, what this does essentially is create more money, which creates more consumerism, more juice in the economy, right? More profit for companies, corporations, better stock market because of that, and ultimately a lot of that ends up flowing to Bitcoin. And Bitcoin is this black hole of capital because if you put more money into it, the 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 price of the commodity asset that is the Bitcoin UTXO goes up in exchange rate in dollar terms, but that doesn't create more supply. So it's unlike any other commodity asset in the world, and similar in some ways, but absolutely fundamentally different in the way where supply cannot meet demand. The only way supply meets demand is from older holders relinquishing their position into the market and trading that for the other asset of dollars. For whatever reason, they're doing that, right? So it can be justified or not. It doesn't really matter. That's the only way supply can hit the market. So it's not new supply, it's old supply, which is redistributing. So it's going from the concentrated hands of holders with lots of Bitcoin to the new concentrated hands of institutions, like as we saw with Strategy and as we're seeing with BlackRock, right? And these are both vehicles of Bitcoin exposure, but they are concentration of actual Bitcoin. And I reckon we will see the concentration of individual holders, which is about 69% at this point. And I think we will see that move towards the concentration of institutional holders for a period of time. It'll trend in that direction. But then there's a point where there's sort of peak concentration in institutional holders and it has to flow out or it sort of equilibrate, like there's an equal sort of plateau that happens. It equalizes is the term I was looking for. Potentially leading to people realizing, okay, well, I don't actually have the benefits that Bitcoin provides by holding a claim to Bitcoin and a Bitcoin IOU in this wrapper and this vehicle. Maybe there's some benefits to having some in there and other benefits of having Bitcoin as the usable unit in the Bitcoin protocol network. So there'll be, in my opinion, there'll be more demand for self-custody at a certain point, but we're sort of moving out of that direction, at least with the concentration of holdings. Maybe the net on net, there's more self-custody happening, but the total Bitcoin amount is being distributed more so. Because there's a large concentration of holdings in the people that were early to Bitcoin. So it's just natural. Just as you think about a startup, there's a large concentration. Think about my business, right? I'm the sole owner of my business. That's a law of concentration of ownership. If I was to start taking on investors, that ownership starts to become distributed. If I then go from a private company to becoming a public company that issues shares into the public market, the ownership distribution happens rapidly and massively. So I think actually Jordy Visser sort of coined the phrase Bitcoin is having its IPO moment, which is really a great analogy, because that's exactly what happens when a company goes from private. It might have handful or a couple dozen worth of investors holding shares, but then once it IPOs, there's going to be thousands or hundreds of thousands of investors into potentially, right? Whatever. It's all different each time. But I think as that happens, there's a technical distribution amount that happens even if total wealth grows as well. So in dollar terms, everybody is getting richer that is holding Bitcoin, but that might mean that might even include and still work with people, more and more people holding less and less Bitcoin. And I think it's going to be quite surprising when we actually come down to it in the future. I think people are going to be quite surprised by how wealthy they are with how little Bitcoin they own. I think people are underestimating this asset based on their current experience of it not going parabolic, of there not being an S-curve adoption, of there being suppression, because there will be suppression of this asset. I tweeted today, actually. Let me just bring up this tweet that I had. Let's see. Nobody. Here we go. Nobody with power wants Bitcoin to become the reserve currency. This is exactly why it is the best suited asset to become the reserve currency. Now you could, reserve asset could be another way of putting this, or the global money of the world, right? That's what a reserve currency is it's reserves that are held by banks, governments, central banks, and they have that money available so they can execute global trade agreements. And they have that as a reserve currency, hopefully to store value as well in some respects, which is why treasury bonds and treasury bills are so popular as a reserve asset. And US dollars are the reserve currency, sort of de facto. It's enforced over time. You can think of Bretton Woods Agreement. You can kind of think of the direct and indirect sort of response by the US military to enforce global dominance of money. But you can also just think about money as a protocol, which it is, and people understand the language of certain money. So if I go to the store right now and I try to pay with pesos, the store owner is going to look at these bills and not understand the value of it, not understand the exchange rate of it, and just straight up not speak the language of that money protocol. However, that is so there's sort of regional money protocols, and reserve asset is thinking of it as a global money protocol. So that global money protocol is the US dollar. And you can look into all of its history about how it became that, but essentially it doesn't function well as a reserve currency. It's almost like everybody is having everybody besides the US, and the US to some degree, I mean, they benefit crazy from this, but there's knock-on effects that are negative for US citizens. But everybody, we'll just say everybody besides the US is really kind of having their arms twisted behind their back to use the US dollar. They're not doing it because they want to. They're doing it because it's the money language that is most universally spoken, and it can settle large amounts of trade easily. So this is kind of the same thing that I believe will happen to Bitcoin. I don't think anybody in power is going to say, I mean, there might be a few outliers. So I'm speaking in sort of absolute sometimes, but of course there's going to be outliers. There's going to be exceptions. But I think the vast majority of very powerful institutions, central banks, and governments that deal with sort of a global reserve asset, they're not going to be hopping on the Bitcoin train and saying, yeah, let's go. Bitcoin is the way. It's sort of like, well, Bitcoin is this massive settlement layer. It's neutral. Nobody can control it. We also can't control it regionally. So we have sort of this resistance to accepting it too much. We're going to create some sort of bad capital laws around it, or some sort of negative treatment to some degree, or just non-favorable treatment. People talking about, oh, well, there's favorable treatment in the US for Bitcoin and stuff like that, more and more and more. Maybe, but it's still treated as property. It should be treated as currency. You should be able to use it as it's intended, without consequences, negative capital gains consequences from it. So I think that it's sort of more of it being forced upon these institutions over time, because it is the most dominant. If you think about this, the Bitcoin network is the most dominant neutral reserve monetary network in the world. The other one that would be competing with this is gold. But how much actual settlement is there with physical gold? I don't think that there's as much as there is with Bitcoin. I think Bitcoin had, I can't remember the exact amount, but in 2025, it settled more monetary value in dollar terms than the Visa network did, which is a huge amount, right? The Visa network is a global payment network as well. So I think that's going to grow. I think if we look at settlement on a neutral reserve money protocol, I think that value is going to grow over time, and I think that uh, Bitcoin will be forced upon these institutions, and they will have to have it. And maybe that's happening now. I mean, people have speculated that for years. I think since like 2020, people are talking, oh, well, central banks are secretly buying it and whatnot. And we have some evidence that, there's sovereign sovereign wealth funds, and there is some semblance of, the Bitcoin stolen reserve that the U.S. has. And I think, the Czech central bank or something like that is talking about Bitcoin as well on their balance sheet. I think there's some publicly facing stuff. There's probably some private stuff going on as well, maybe with national mining resources or something like that. But I think that this happens because they're forced to. And I think everybody ends up being forced to adopt Bitcoin, but it's not through violence and coercion and proof of weapons like the US dollar was, right? The US dollar in Bretton Woods was essentially an oil, okay, you settle oil, you're the largest oil producer, you settle oil in US dollars, and we provide protection and money and weapons for you to do so. And it became less of a formal agreement and things over time, but the U.S. has always kind of been this global enforcer, the police of the world. What's that? There's that South Park movie, America. I can't remember what the title of that movie's called, but that's basically like the premise of it is America is like the world's police. And that sort of enforces US dollar dominance, but Bitcoin is a non-violent protocol that is completely decentralized, and nobody's forcing anybody to adopt, and yet it will become adopted, because if you don't, it's sort of game theory, right? If you don't, you will not be able to trade with people who demand it, because they understand that it's a neutral reserve asset, and they no longer want to use an asset that is controlled regionally by somebody else that can create it at nothing. Because if you think about the trade imbalance that is happening, people talk about the trade imbalance, and tariffs are supposed to help this and bring back manufacturing and all this, right? Team America, thank you, I appreciate that. The trade imbalance is happening because the US can print money at 11 cents for a $100 physical bill, and much less than the cost of that for a digital $100. And they can use that printed money to buy goods and services that take energy and time and effort from individuals and real cost of capital to create. And they can trade something that's worth 11 cents or less for something that's worth $100 of actual human effort to create. So that is a huge amount of benefit to the holder, or to the creator of the reserve currency, the global reserve asset. And they pay what, 3 to 5% in treasury bills for people to to be able to borrow that. So there's additional cost on that, but that just comes from more printed money. So there's really no cost to it. It's sort of an illusion of cost. And I mean, it erodes the entire middle class and, decimates manufacturing locally and creates dependency on all sorts of different industries around the world. And that those dependencies are going to be enforced by force and coercion. And all of that has no place in a world that runs on Bitcoin. Bitcoin reduces violence in the world and power structures that are truly unfair. There's a real cost of capital or a real cost of acquisition of Bitcoin. You cannot get Bitcoin for free. As much as I would love to be able to get Bitcoin for free, there is no way to do that. I have to earn it. I have to earn it honestly. And so does everybody else. And this creates a brand new system. And I don't think regional powers are going to want to have Bitcoin in their reserves and to use it for global trade, but I think they will become forced to. All right, so that does not answer when will we be there again, but it does bring up the fact that Bitcoin is stronger as a monetary network than it's ever been before, has more global adoption than ever, and is needed more than ever, right? If we look at what's happening in Iran, hundreds of people dead for protesting their government, which started off as an economic protest because their currency was hyperinflated. And again, another tweet. I'm releasing banger after banger of tweets here, guys. You really, really got to follow me on Nostr, hopefully, but I'm also posting on X. And here we go. This is another question that I brought up to people. And I said, how many more cases of currency collapse and civil unrest do we need to see before people wake up to Bitcoin? Bitcoin is a grassroots, bottom-up adoption. And there will be top-down adoption forced upon the top that is in power because they control money. And it's been grassroots from the beginning. So even people talk, well, BlackRock's into Bitcoin and MSTR is buying 700,000 Bitcoin. And these are aspects of trying to centralize Bitcoin and take away power of Bitcoin holders. So it's important to, as individuals, to recognize that centralization risk and to recognize that the power comes from self-custody. So I think that I think we will. I mean, this tweet was inspired because of what's happening in Iran, and it's Venezuela is in the state that it's in now because of massive corruption and inflation of the currency as well. I mean, how many people? I mean, I know I saw lots of imagery of market stands weaving together Venezuelan bills to create hats and baskets because that had more utility than those bills did at the time, and the government just kept creating more bullshit currencies and would hyperinflate them because people lost trust in them. But prior to that, there's the Cantillon effect, which is where money is not evenly distributed. So money is printed from the top and given to the banks, and the banks lend it out and earn interest on it. And everybody within there is sort of cozying up to the money printer. And the further away from the money printer, the less actually you are taken advantage of for being far away from it. So this is an extractive process. And these small regional powers don't have the ability to express that inflation on other individuals and create some sort of smoke and mirrors between what is actually going on here. And the regional people feel the effects of that inflation way more because the cost of importing becomes so much. So the collapse happens really rapidly compared to what we have with the US, which is just happening slowly. But the question remains, how many more currency collapses do we need? I think there's like 180 currencies in the world. I mean, 180 might be the answer to that. But you stomp on one dog turd, another dog turd appears. But hopefully people become more and more aware of Bitcoin. It's something that's so incredibly useful in today's age of the monetary system. It's just inevitable that people will understand that to some respect and understand that it keeps going up in value so they can just hold that. Like you only have to have 80 IQ to understand Bitcoin. Okay, if I hold this, I can buy more stuff in the future. You don't have to understand core versus knots or what the cold card is doing with by generating random numbers or how seed phrases work. You should operate and do all that stuff. You should learn all of that, but you don't have to understand if I hold this thing called Bitcoin, I can buy more stuff in the future and stuff is good. It's pretty simple. It's pretty damn simple. All right, let's get to some questions though. Naughty Vlogs in the chat. Great to see you. Cool that your account has 10 subs. Growing a YouTube channel. Very cool. Very cool. Do you think that a world that runs on Bitcoin would have more deflationary crashes than the world today? If so, do you think they will be bad like the Great Depression, or will they not be that bad? Deflationary crashes are bad for the current monetary system because it runs on debt, and basically the debt is unpayable and needs inflation to pay back those dollars. So there will, as Bitcoin becomes more and more adopted, the Ponzi scheme of an inflationary currency that cannot handle deflation becomes exposed sooner and sooner. It is ridiculous to build an entire system on something that cannot handle a deflationary event that breaks at the sign of deflation in the economy. Why? Deflation is natural. Human ingenuity, our human instinct, our human ability to work together creates efficiencies. Those efficiencies roll over into the economy at large by making things cheaper and easier to acquire. This is deflation. This is price deflation that happens as technology gets better and better, as people get better and better to work together. Why are we building an economy? Why do we exist in an economy that cannot handle that? So Bitcoin is, people will debate it. Technically it's still inflationary right now. There's 450 new Bitcoin printed, but it had every single day. It is programmatically inflationary and largely deflationary based on the fact that lost coins can happen over time. So having a deflationary currency is more natural and makes a lot more sense than having an inflationary one. I'm just going to go over to Zapstream. I'm just going to check out and make sure that I am live. Oh, I am. Okay, and there's somebody watching there. Nice. Love to see it. Love to see it. Just going to see if anybody. All right, no comments on there. No donos, but yeah. So yeah, it could create some terrible economic situations, but this is largely the case. It's deserved, right? If you have unpayable debt, there's recourse for that. There's a consequence to that, and as there should be. Vandalay, how would you diversify your Bitcoin holdings? Having all in one hardware device might not be the smartest move, right? Yeah, there's no risk personally. I don't believe that there's a risk to having all your Bitcoin in one hardware device. I think if you have proper pins, like the Cold Card Q has 2 pins that you add in to create an anti-phishing word, and your device then stores your seed phrase, and hopefully you have a passphrase on top of that. That's the bare minimum you as an individual should have. To diversify your holdings beyond that would be to create a multi-sig of some kind, whether DIY or a multi-party sort of custody solution there. There's more risk, in my opinion, to diversify between additional hardware wallets, as you have to create additional backups and create additional storage and complexity within there. So I would personally have one hardware wallet. If I was just an individual without a large amount and I wasn't thinking about longer term custody solutions such as multisig, one hardware wallet, heavily protect that hardware wallet the best you can. A good PIN, 2FA, multiple backups, secure location, and maybe not even have it in your home. And then you could create additional wallets with different passphrases for not necessarily custody diversification of protection, but because you have different Bitcoin amounts, they're allotted to different places or different privacy connections with the UTXOs that you hold. But I don't personally see a risk of having only one hardware device. I actually see the complexity as a vulnerability of having multiple. Very interesting. Your thought on inflation creates dependency on other countries. Yeah, of course. I mean, this is the large geopolitical talking point of maybe last year or the year before about Taiwan and getting investment into the country of TSMC, creating a factory here. America basically has to fund part of the military industrial complex to position itself to be able to defend a country across the Pacific, because they're dependent on the chips that this company makes, which has happened for a long time. So yeah, it creates a massive dependency on Taiwan and a dependency on China as well, to not be a nation that actually like physically puts boots on the ground and invades a country and all that kind of stuff. I'm not sure what this is in reference to, except governments who can just seize it. Except governments who can just seize it. Oh, yes, probably to the cost of acquisition. Yeah, yeah. So but even that, right? There's cost of acquisition of governments just seizing it. It's not like people are just. It's not like the Bitcoin's just there and they're just taking it. They have to hire people who are going to hack it from the pig butchering scams. They might be able to get it for way less than you and I because they're doing it in a, I would say, sleazy way, but there's still cost to that, right? There's still investment into that. There's still the potential of it not working out. Even non-governments, like people that scam people out of Bitcoin, there's still a cost to them doing that. And again, it's not going to be I mean, if they're bad at it, maybe that cost is more than buying Bitcoin just straight out and doing it honestly. If they're good at it, it's less. There's a moral cost to it as an individual, that they will pay throughout their life of being a terrible person. But yeah, there's still a cost to it. Any take on gold price? Yeah, I mean, gold, as I kind of said earlier, is the other neutral reserve monetary network. And it has more history than Bitcoin, and it has more understanding. It's easier to understand just based on it being a physical asset that you can exchange and somebody else can see it and, ooh, shiny rock. I'll give you this and this because you gave me this shiny rock. It's very kind of simple. Um, and historically makes sense for a lot of people and has historically saved people. So the people that were able to use the Weimar currency prior to the incredible inflation they had to buy gold benefited, and were able to save their livelihood because of it. So there's historical precedents there of using gold to de-risk from the concentration of regime risk and nation risk and foreign nation risk as well. So I think that's caught a large bid because of that, and I think retail will FOMO into that and push prices up and everything. But largely, it can be effective at storing value, but largely it suffers from many problems that Bitcoin has solved. The large one being that it is very inefficient at actually being a monetary network, and it's very costly and heavy and expensive to secure and to transfer. So it's never going to work as money again, and yet people are holding it for the store of value money function that it has. So because it fails, or is less, there's basically these characteristics of money, right? There's There's divisibility, portability, saleability. Did I say divisibility already? Verifiability, recognizability. These aspects of money, if you rate gold on there, basically every single one of them except portability is better than fiat. But if you rate all of them versus Bitcoin, Bitcoin beats every single one of them. Scarcity is another one, of course. And gold is relatively scarce, although it basically doubles every 60 years, the total stock. And two-thirds of it, two-thirds of it? Yeah, two-thirds of it has been stockpiled and created out of the ground since 1950. I believe it's two-thirds. It might be one-third, but pretty significant still. So it fails as money, and it's worse on the characteristics of a store of value than Bitcoin, except one thing, which is history. So people that value the ultimate security that they believe history implies, but right, the past results is not an expectation of future results, right? That's kind of a saying with investing. I would caution people with gold with that, because there's a huge monetary premium on gold, right? Gold is not just money. Bitcoin is just money. It is only a monetary premium. So the monetary premium, the monetary properties of Bitcoin is better than gold. So people seeking those monetary properties will eventually weave their way into Bitcoin, seeing the purchasing power of that take on more of the monetary premium, since it's all monetary premium. And the monetary premium on other assets has to shrink. Of course, dollars can increase as well, and that's basically kind of what we've seen with Bitcoin. Is Bitcoin's price has gone up uh, largely, I would say, because of dollar debasement. And if you price it in something like gold, which is another scarce asset, it hasn't appreciated in a while. So I would just suggest, however, that the monetary premium on other assets will shrink as the value of Bitcoin appreciates over time. I don't know why, but Damas, and the other Nostr app just don't feel great. Their For You page does not show me very good content. I only see posts that have one like or something. The For You page, I think, is just based. I don't think any of these things have like real algorithms. He's talking about Nostr here. The page that I like using Primal and using the 24-hour highest viewed posts, highest rated posts. I find some value in that, and then it's really just about curtailing and following the right accounts on Nostr. The algorithm really doesn't do it for you. Do you think that in order for mass adoption, use of money, Lightning must become the default transfer method? This is an interesting question. Lightning has its limitations, which are partially intentional, right? It's limited by actual Bitcoin being held somewhere. So it's limited by the capacity of the Bitcoin, and therefore the value of the Bitcoin on the Lightning Network in channels. Excuse me. I'll just one sec. So yeah, I do think that Lightning is a killer app of Bitcoin. And you'll see that actually no other crypto has considered creating something like the Lightning Network. Litecoin could. There's a lot of cryptos that are basically copies of Bitcoin with slight changes that could create something like Lightning, but largely no one cares about these other cryptos. And none of them are competing for the protocol money layer of Bitcoin. And I think Lightning is incredibly important for the use case of Bitcoin as money. I made a video recently, actually last week, about the Rumble wallet. So Rumble is a competitor to YouTube. They introduced a wallet that you can use, Rumble Wallet. It's Bitcoin, USDT, and Tether Gold. And it's the way of their streamers and users to be able to accept Bitcoin. And mostly it seems like actually just the USDT function for tips. Now, they there's some serious flaws with this, and I think it's basically an affinity scam of them just saying, "Hey, we accept Bitcoin. We're Bitcoiners. All the Bitcoiners come over to Rumble and whatnot, and we'll sponsor your podcast and whatnot." I think it's gesturing. It's not reality. I think if they actually wanted to create a tipping function, they would use Lightning. On-chain does not work for this. On-chain is not built for small transactions. It's a broadcast network that is. It doesn't make sense that you need your small transaction, your day-to-day, your coffee payment to be held on the global neutral reserve ledger that is held by hundreds of thousands of nodes around the world. You can do that in a payment channel where that can be a private ledger that is held within that network. Creates more privacy, and it just makes a lot more sense. It can happen instantly. There's so many reasons for that. So for tipping features on the internet, right? This is why Lightning has been integrated into Nostr and why it works so well. But it can't be. See, the thing with that is like a self-custodial Lightning wallet is pretty difficult to create. And so Rumble just didn't create it because they don't actually care about Bitcoin, in my opinion. And they just wanted Bitcoin's name on there, and they created a nightmare of a Bitcoin wallet because they didn't integrate Lightning, because it's difficult to use as self-custody. So you would have to use a Bitcoin compatible wallet. And they would have to have probably a custodial situation on their platform for payouts with Lightning, and that would be a whole difficulty of them as a public company to do that. Maybe, I don't know. I don't know all the ins and outs, but I just know that it's a nightmare of a wallet, and basically Lightning enables Bitcoin to be used in a way that the on-chain Bitcoin network does not, which is for small day-to-day payments. We tried this in 2014, 2015 to use Bitcoin as a medium of exchange for day-to-day usage. And that's not what a broadcast network is built for. It's like using internet only on TCP IP, right? To send data packages to each other. That's not how we use the internet day to day. We use HTTPS. We use the email protocol. All of these protocols that are built on top of the base layer of the internet. That's how something is going to happen here with Bitcoin. Is Bitcoin stays simple, dumb, incapable of smart contracts and complexities that increase vulnerabilities. And layers get built on top of Bitcoin that have those complexities, so that if they fail and don't work, it doesn't affect the base layer. And they increase functionality on other layers, again, keeping the safety and security of the base layer intact. So yeah, Lightning needs to become a default transfer method and payment network for the types of payments that it is designed for, whereas Bitcoin needs to become the monetary network for the types of payments that it is designed for: large final settlement payments, and for utilization on layers above it. Thoughts on Monero? I don't really have that many thoughts on Monero. I don't really see a use for it. I think Bitcoin can be private in many ways. I think Bitcoin has this level of transparency and privacy within it as well. It's the problem with Bitcoin's privacy is largely the distribution methods, the on and off ramps, people call them, into fiat currency. So when Bitcoin gets used as an actual currency between people, peer to peer, there's no problem with privacy. I mean, if you're using it in the way that it's designed, as UTXOs, as bills, as certain sizes, and sending from certain amounts, and receiving back and change addresses, not using a wallet like Tangem that doesn't have that ability whatsoever. So Monero sort of has additional complexity. It basically creates like a coin, or like a fake coin join every time you send a transaction. That's sort of my base understanding of it. And it has clever cryptography to create more anonymity beyond that, and creates additional bloatage of data. If it was to settle the types of transactions that Bitcoin would, it would be massive. It also has a 2% inflation rate, sort of a tail emission inflation rate, which is, I'm not sure why they do that. I think it's to incentivize spending, which is a Keynesian economic bullshit nonsense. 2% inflation means that the amount of that currency is going to double over time, triple, all of that. So makes no sense there. Bitcoin's privacy is adequate for the vast majority of people, and privacy tools need to be developed on Bitcoin. Money protocols dominate, as I talked about in the beginning of this show, and we need to build better privacy tools on there. Like CoinJoin is a great example of it. Lightning also has privacy implications, and I think largely these privacy coins are not as private as people talk about. And I think the other thing too is if I was an intelligence organization that wanted to collect data on people, I would create something with a backdoor of some kind or some ability to figure out who the anonymity set is. And I would create an anonymous type thing where people that want anonymity for doing nefarious things, not just for digital privacy, which people should be entitled to. But it's sort of this idea of creating a honeypot of information. And people can criticize Bitcoin for that too, to some degree. But again, Bitcoin is sort of like a glass box with money inside of it, but everybody is wearing masks as they exchange the money within there. So you can see the transactions happening, but you don't know who is doing the transactions. We're almost at an hour here. This has been a really interesting live stream, in my opinion, and we'll do a couple tosses in the Bitcoin wishing well again, but I'll just quickly get through some of these questions. Advice on somebody wanting to be a Bitcoin educator. I think the advice is to just start. Write down some ideas of things that you feel like you have a good understanding of in your own way, and figure out a way of wanting to express that. It doesn't have to be YouTube videos. It doesn't have to be podcasts. It could be writing. It could be whatever. It could be a book. It could be tweets. It could be Substack. It could be YouTube videos. It could be short, long, intricate, whatever. It's about creating your own voice, because everybody is incredibly individual and can reach specific people that, like, you might be able to talk better to an individual than I can, and I could talk better to this other individual than you could, right? So everybody has a voice that can talk about Bitcoin. That would be my advice. And to just start, just try things. That's the other thing too, is largely you don't know what's going to work until the audience shows up and actually wants what you're creating. So just try things and don't be super discouraged, because it's incredibly difficult because there's so many people trying things all the time. But if something does end up working, figuring out what did work about it and trying to replicate that with new information is a good idea. This is a good time to buy Bitcoin considering the cost of mining right now. It's always a good time to buy Bitcoin if you have extra fiat. I think the cash and Bitcoin strategy that we talked about on Maple Bitcoin is a good strategy, to have cash to offset the short-term volatility risk of Bitcoin, and Bitcoin to be the long-term asset that you buy. I think we'll be trading around in this range, and I'm incredibly bullish for 2026. I think that we are going way higher, but I could be wrong. I've been known to be wrong about price, which is why I didn't make a price prediction for this year, because I was wrong about last year. I thought it was going to 150, I think was my base case. And we didn't go there. So, close enough though. Do you think buying IBIT shares in my TFSA makes sense because it will cost a lot in spread fees to buy actual Bitcoin? I don't think you can actually hold actual Bitcoin in your TFSA. So you're forced to buy sort of a wrapped product like an IBIT. Yeah, I think it's better than, I think having Bitcoin exposure in a registered account is much better than buying anything else in a registered account. So personally, in my TFSA, I hold I hold IBIT, I hold MSTR, I hold MSTE. Yeah, you're welcome. And recently saw your Tangent video. Do you have one similar for Ledger, or any quick thoughts on their latest devices? I don't have any thoughts on their latest devices. I'm actually getting a friend from the Bitcoin meetup that I run is going to give me his old Ledger, and I'm going to run some tests on it. show people how to use Sparrow with their ledger, because at least they can move away from the closed source application of Ledger Live, and also just discuss the real vulnerabilities of using Ledger, which are vast. There's a lot of problems with using Ledger, in my opinion. But I'm going to get some hands-on experience with using them soon. I really didn't want to buy. I wanted to make these videos for a while, but I really have not wanted to buy and support Ledger whatsoever. What advice would you give for somebody thinking of quitting their job to work on their own, because you have done that and don't work a W-2 job? Yeah. Personally, what I did was I worked 5 days a week. This was in 2017, I think was the last time I had a job. I worked 5 days a week, and I worked on weekends on my business and afternoons after my job was done. And I built a business that I was making as much money from as my 9 to 5, on the side as a side hustle. And then I went to 4 days a week, and then I went to 3 days a week over time. And that entire time I was building that business, and businesses are incredibly volatile. You're not guaranteed a certain amount of income. So I was making as much on certain months and other months not, but the entire time I was able to save that balance because I was still able to cover my expenses by working 3, 4, 5 days a week at different times. So I sort of gradually did that, and the whole time building a savings pool that I could dip into as I knew the volatility of my business was fluctuating when I did decide to go full time, which was the case. I think I went full time, and the first month of my business, I made a little over, maybe about 30% of what I made the previous month when I did have a job from the business side itself. Plus, I didn't have a paycheck, W-2 paycheck. So I knew there was going to be incredible volatility with my business like that. And then I just, there was lean times, lean times with my business for sure. And I would expect that. And I would work as hard as you can to build something sustainable for the long term. I would really think about it as well. I think building a business, working for yourself is a really, really great idea. I think it's the best thing that you can do as far as work goes for a lot of people. Some people work better in as part of a structure where they can fulfill other people's visions. That's where they best fit. So I would think about that. I would think, who are you actually? Do you actually want to be the leader of? Do you want to be the one who pushes your own destiny forward as far as what you create and what value you create for the world? Not everybody wants to do that. Not everybody's best suited for that. And I would also just think about the fact that you could get another job if you have to. Now, the job market is fluctuating and changing all the time. So with that is that caveat that maybe you could get screwed over by doing that. And it could be challenging to get back into the same sort of work environment, and know that you're taking a risk. But risks are sometimes, a good thing to do, good thing to take. And yeah, just understand that as you take them. All right, we're going to go back to Bitcoin Well to finish off the live stream today. Thanks everybody for tuning in, for asking questions. I had a lot of fun today. I hope you guys did too. And we're going to throw a couple coins in the wishing well. So first person to scan the QR code that's about to pop up on screen here will win some free Bitcoin. Upwards of 1 million Bitcoin. People have won 210,000 on here before. And whoever scans this one wins 627 sats. And this is the reward program that Bitcoin Well does. And the only one person gets to win this. So whoever scans this with their Lightning wallet wins this sats. If you want to not compete, if you want to use the best Bitcoin exchange out there, the last Bitcoin exchange you'll ever sign up for, check out my link for Bitcoin Well in the description. You'll get, I believe, 5 free tosses into Bitcoin Well, 5 chances of winning 1 million Satoshis. So Senka 1 here, everybody. And let's see, 512 Satoshis. All right. Appreciate you all. Lots of videos coming this week. Tuesday, Wednesday, Thursday videos, and then Friday live stream on the Maple Bitcoin channel. It's no longer streaming on this channel. I don't know if you guys noticed that, but you have to go to Maple Bitcoin on YouTube and subscribe and watch the live stream with Rajat, Jor, and I on Fridays. Appreciate you all. See you next week here at 10 a.m. Pacific Standard Time on Mondays. And thanks everybody for tuning in. Bye for now.